Good day, folks. Jim here from FX Charts. Thanks for tuning in. Monday, the 15th of September. Well, it was a huge week last week, and I think we can expect more of the same this week. There's plenty of action ahead. We've got the highlights will be the FOMC meeting on Wednesday, at which traders will be looking for any change in the language from the Fed, and the other highlight really will be the Scottish Referendum Vote on Thursday. So cable could be all over the place. We've got plenty of other stuff out as well. We've got inflation data from the EU, from the US and from the UK. We've got central bank minutes from both the Reserve Bank in Australia and from the Bank of England. We've got a Swiss National Bank interest rate decision on Thursday. And out of New Zealand, we've got the GDP, and on Saturday, the general election, of course. So let's go and have a quick look at the charts. And as you can see, the Euros, it's having come down an awful long way. It's now found a little bit of a base here, and it looks as though we're trying to form a kind of reverse head and shoulders. The 200-hour moving average is standing in the way at the moment. But if that plays out, then I think we can possibly go back and test the descending trend line here just above 130, and possibly go back to the FIBO resistance here, which is around 130.60. Now, if we saw it up there, I think at the end of the day, it's only going to give us better selling opportunities, with the Fed looking as though they're likely to be a little bit more hawkish this time around, and may suggest a timing on when rates might start to rise. At the same time, we've got the ECB looking to head in the other direction, so I really don't see much upside at all for the euro. If we go further out onto the dailies, although the daily MACDs are turning a little bit higher, as are the 4-hourlies are also pointing a bit somewhat north. So I do think we can go back and test this 130.60 level, but further out we've got a good descending trend resistance, and I think if you were to see it back up towards this level where it broke down from, that's around 130, and I don't think we're really going to go that high. But if we do, then I think it's probably a sell if we're looking for the next leg lower. And if we go further out, let me just get rid of that. Then the major support comes in here at about 127.5, which is also rising. That's the previous low down around here, 127.5. Now we've also got this rising support off the monthly trend line going back a long way. So I think if we get down there, we should look to slow up a bit. If we break through that, eventually I think we are probably heading back down towards the 200 month moving average. It's about 121. But in the meantime, I think just play it a little bit steady at the moment. Look for slightly higher levels to sell into. Dollar yen, well, that's on a bit of a tear. It's moved up fairly quickly, and it's taking out this resistance here at 107.35, 37 area. Now the dailies are pointing higher, becoming a little bit overbought, and we are running into some resistance. You need to go up to the monthly charts here. We're going to come up, we're taking out the 200 month moving average. That's at 106.70, and as I say, we've taken out the higher level here, this trend resistance. We're just going to break through that. Now the descending trend resistance comes in here at about 108.5. So if we can head higher, I don't think I'll be looking for too much more than that. The monthlies are looking a little bit overbought, but they are heading higher in the nearer term. Though, as I say, the dailies look reasonably strong, and the weeklies also are showing some positive momentum. So we could go up here and have a look at this 108.5 level. And I think up there I'll probably be taking some profit, but eventually I think we're heading higher towards I think what this 112 area, which is the 76.4% move of this whole move down here from where is it, 123.5 I think it was. So looking to buy dips is the theme of the game, but I'd be surprised if we go back really much under this sort of 105.5 level where it topped out before. Personally, I think if you can buy it around 106, it's probably not a bad bad bet, but I'm not even sure we're going to see it down there. There's too many people looking for it. Sterling, well, sterling's recovered. It's trading on poll results, really. It's trying to fill in the gap, more or less has done really now. I'm not sure I'd be playing it too much either way before the poll result, but I can't see that they're going to vote yes, really, for independence. And if we do see a no vote, then sterling should head higher. The dailies look as though they're turning, and in the shorter term, as I say, we've got resistance here, round about this gap here, where it gapped lower 2 Mondays ago, and I think that's about just above 163. The FIBO resistance 163.20, and then we go straight back up here to the descending trend line. That's a 164.70. I don't think we're going to get there, but if the no vote does win out on the day, sterling will see a bit of a squeeze higher, and as a relief rally, and could actually end up going a fair bit higher, but that's it's too early to speak of that yet. Now, if the no vote does win out, well, in that case, don't stand in the way of sterling. We've been down here to the 100 and 200 week moving average, and it's bounced off that at the moment, 160.5, the 100 week. The 200 weeks down below 160, just below 160. I think it'll take that out pretty quickly and head back. Some people are calling it down below 150. This 153.90, this FIBO support here, and the rising trend support is about 151. That's a long way off. And as I say at the moment, I just leave it alone. Let the market do the work. I don't think it's worth being too involved. Dollar Swiss, that looks like it's topping out in the short term to me, and we may come back a little bit lower. In the same way, I think Euro's heading a little bit higher. I won't go too much into this, but if we could see Dollar Swiss back down here around 92.70, then I think it's a buy. That's 100 pips away at the moment, and there's some support here, sort of 93.30, below 93.30, I should say, and then around 92.85. In the longer term, though, I'm still looking for the dollars ahead a fair bit higher. It looks to me as though it's picking up some good momentum, and if we can take out this top here, which was at 93.95 last week, then I think we're heading back up here, probably towards this high eventually at around 98. I can't remember where that was. 99 up, 99.60. But we've got 97 and 3/4, and this high here, which was at 98.40. There'll be resistance ahead of that. But I do think eventually the dollar's heading hard and back towards parity. The Aussie, that's certainly not heading back towards parity. It's opened lower again this morning. Let's have just a look at the shorter term charts. So opened lower again this morning. That belongs down here. Let's just right. The weak Chinese data over the weekend has seen it open a bit lower, and I think we're probably heading below 90 at some stage. Bit of a gap here to fill in to the Friday's close. That's about 99.40. But if we head further out, then I think we've got support here at this 89.80s, so that's 61.8% of this move up. There should be some support down around here as well at sort of 89.60, which is the 100% FIBO extension of the head and shoulders. So we've got the move down from the head and shoulders up to here and then back down to here, and that's where the extension comes in. You can't see it actually on this chart. There we are. So and the weeklies, they're not saying it's awful lot. I do think that we've probably seen much of the move in the Aussie for now. But with the Fed meeting on Wednesday, we could see the US dollar spike higher. Well, we would see the US dollar spike higher if they're as hawkish as expected. US bond yields are heading higher, so the Aussie could come in for some more downside pressure. And the low down here, 86.60, that we saw way back, when was that, in January, that could come under some pressure. But for the time being, probably hold around here. Today we've got the RBA minutes tomorrow. That won't they'll talk the Aussie lower, I suspect, again. And we've got the RBA annual bulletin later in the week. I think it's on Thursday, so watch out for that. The Kiwi, equally under pressure. The commodity block are all taking a bit of a hit. And the Kiwis actually at quite an important point here. It's at the 61.8% support. If that gives way, then there's not really much until this sort of 80.5 level down here where this low was, and then we head below 80. Selling rallies is the name of the game. Not really sure we see too much above sort of 82 really. I don't think we're probably going that high. The descending trend resistance is up here at sort of 82.80, 82.75. If we see that or anywhere close, I think it's probably a good sell. I don't normally trade the Canada, but it's worth looking at today because this is a monthly chart, and dollar Canada is this is back to 2002, this high here, and it looks as though we're just taking out the monthly resistance. And if we go back to the dailies, you can see where we've taken out the monthly resistance, heading towards the FIBO resistance here, just above 111, about 111.20. And if that gets taken out, then we're heading up here towards this 112.75 level. Now, if and when that was to go, we can have a look here. That's 112.75. If that were to go, then there's really, you've got to go all the way back here. As you can see, there's not an awful lot of resistance to stop the Canada going to where is that 117.25 or so. So I think potentially there's quite a decent move coming on the top side there. The weeklies look as though they're building up ahead of steam to go higher as well. So with a bit of luck, that might be a decent trade over the next few weeks. We'll just take a quick look at the dollar index while we're here. Now the dollar index is it's had a storming run, and it's just come up to 84.51. Just shy so far of this 84.75 previous top in July 13. Now I think we're probably in for a bit more consolidation, and if we break this sort of 84 level, we could actually have a little bit of a dip back down here to sort of 83.60, possibly even back down to this trend line at 83.25, when the first FIBO support isn't really seen till 83.15. But any dips, I think, will be buying opportunities. As you can see here, the daily MACDs look as though they may be topping out, and the RSIs and the stochastics also looking as though they may want to head a little bit lower. Let's just head forwards to the weekly chart, though. And on a weekly basis, sorry, let me just blow this up. On a weekly basis, I think we're, you know, the indicators are all headed higher. The stochastics are a little bit overbought, so we may see a week or so of consolidation. But I think with the FOMC coming up, we're going to see a decent move one way or another. I do think the market's chasing this move. They're not really on board it, so I think 84.75 could get taken out. If it does, then I think possibly heading back towards 85.50, which is the 76.4% of the of this moved all the way down here from 89.50 to wherever it bottomed out, 72.60. So that's what I'm looking for. A move back to 85.5, I should say, somewhere around there. Okay, that's about it today. As I say, it's going to be a very busy week, and today's actually not too bad. There's not an awful lot out. We've got the EU trade. We've also got the US industrial production and capacity utilisation. And from the Bank of England, we got the quarterly bulletin. There's not an awful lot else out. There's nothing from Japan. Australia's just got new vehicle sales. Nothing from New Zealand. And there's not an awful lot really from the UK either. So that's about it for today. Have a very good one. I might come back with a video later on the crosses, which have also seen some good action. So have a good one, and we'll talk to you later. Bye.